European markets bounce back, but gold's shine fades. Tuesday's trading session in Europe brought a breath of relief as markets attempted to rebound from recent setbacks. Most European stock markets opened in positive territory, following Asia's lead, while US futures took a slight dip. A closer look at the Italian market reveals a standout performer. Milan's exchange soared by 0.8% just before noon, propelled by substantial gains from financial giants UniCredit and Intesa Sanpaolo, energy giant Eni, and the aerospace and defense leader Leonardo. But here's where it gets controversial. While defense stocks contributed to Germany's gains, the DAX index remained in negative territory, down 0.13%. The newly listed TKMS, a German battleship and submarine manufacturer, continued its impressive run, rising by 6.28% in Frankfurt. Meanwhile, Rheinmetall AG saw a modest increase of 0.48%, but BAE Systems in London dropped by 0.91%. A potential game-changer in the aerospace industry, Airbus, Thales, and Leonardo are rumored to be in talks for a satellite merger. While share prices remain relatively stable, Leonardo's stock surged by 0.56% on the news. The FTSE 100 in London climbed by 0.22%, boosted by banks and energy stocks, while utilities also attracted investors' attention. Other major European indexes, such as the Stoxx 600, remained relatively unchanged, and Paris CAC 40 inched up by 0.13% before midday. Russ Mould, investment director at AJ Bell, commented, "Wall Street's strong performance on Monday has set a positive tone for Asia and Europe on Tuesday." He highlighted the focus on US interest rate cuts, upcoming corporate earnings, and the highly anticipated US-China trade talks. And now, a twist in the gold market. Gold futures took a step back after reaching an astonishing record high of over $4,390 per ounce. By 11:45 a.m. Central European Summer Time, prices had dropped nearly 2%. This retreat comes after a staggering 60% climb since the start of the year, driven by safe haven demand amid geopolitical tensions, economic uncertainties, and a struggling US dollar. HSBC predicts gold's rally to persist into 2026, potentially reaching $5,000. Oil prices saw a slight uptick on Tuesday morning, with the US benchmark at $57.62 per barrel and Brent crude at $60.99. The euro weakened against the dollar, falling to $1.1633. A new era in Japan. Asian markets rallied, with Japan's benchmark index nearing the 50,000 mark for the first time, as Sanae Takaichi, a conservative hardliner, was elected as the country's first female prime minister. The US dollar strengthened against the Japanese yen, reaching 151.31 yen. Takaichi's potential influence on the Bank of Japan's interest rate policy could impact the yen's value, complicating the central bank's inflation control efforts. Hong Kong's Hang Seng and the Shanghai Composite also joined the rally, rising by 0.65% and 1.36%, respectively. What's driving investor sentiment? The possibility of a meeting between US President Donald Trump and Chinese President Xi Jinping at a regional summit later this month has sparked optimism for a potential easing of trade tensions between the two economic powerhouses. Additionally, the Chinese Communist Party's policy-setting meeting this week adds to the anticipation. Earnings season in focus. Investors are eagerly awaiting a series of earnings reports, including Coca-Cola on Tuesday, Tesla on Wednesday, and Procter & Gamble on Friday. With the S&P 500 rallying 35% from its April low, companies are under pressure to demonstrate profit growth and alleviate concerns about overvalued stock prices. These corporate profit reports have become even more critical in gauging the health of the US economy, especially with the government shutdown delaying essential economic data. The Fed's dilemma. The Federal Reserve faces a challenging decision, whether to prioritize concerns about high inflation or a slowing job market. While Fed officials have signaled potential rate cuts to stimulate the economy, this strategy could backfire if inflation worsens, as low interest rates may exacerbate the issue. A critical update delayed. The U.S. government's inflation report for September, initially scheduled for earlier this month, has been postponed. This delay affects the Social Security Administration's cost of living adjustments. With the government shutdown continuing, further economic updates remain uncertain. What do you think about the Fed's rate cut plans? Are they a necessary boost or a potential risk? Share your thoughts in the comments below.